Welcome back, everyone. So with the new year starting, I thought this would be an opportune time to show you my Roth IRA and how it's been performing. I just received the fourth quarter of 2020 dividend, the last dividend of 2020 about last week. So I thought this would be a perfect time to show you. I haven't shown you my Roth IRA in quite some time, and 2020 was an interesting year to say the least. I've held this portfolio for a couple of years now as I opened it up shortly after I turned 18. So I want to show you what it's been gaining, if anything, throughout 2020, and how it's been doing, what the percentage is, what the dollar amount is, what I'm holding, and just an update all around on this portfolio. This portfolio is certainly the minority. It is a small portion of my total net worth, but it does give you a good indicator of how the market has been doing and faring over the last couple of years, including 2020, and what you could accomplish just by making small but consistent, whether it's on a weekly or monthly basis, contributions and additions to portfolio. So let's open up my E-Trade account. We'll dive right in and see you on the inside. So before we get inside, just to clarify for all of you, the IRA or the Roth IRA or any retirement account for that matter is just a shell. It's not the actual investment. It is not what you're putting money in and funding, but rather just the shell that allows you to defer those taxes, pay them later or pay them upfront, depending on if it's a IRA or Roth IRA. It's not the actual investment. It's not actually what you're putting your money in. Now that we're logged on to my E-Trade account, you will see I only hold one fund. Like I had said, the Roth IRA is not the actual investment. The actual investment here in this case is VFIX. You can put the money in anything though. You can put it in any sort of penny stock. You can put it in any stock. You can put it in any fund. You can put it in any REIT, whatever you want to do. You can put it in. The IRA is just the shell. So I hold VFIX or VFIAX. It is an S&P 500 index fund, and it tracks the performance of the S&P 500 index. And for me, it was very tempting to put a lot of my money in Tesla because I just kept watching it go up and up. As you know, the majority of my money is in Apple stock from my past Apple stock videos. But now that Tesla has been added to the S&P 500 as one of the companies, one of the 500 companies, the 500 largest companies in the world, now I indirectly own it. So at least I'm proud to say I can indirectly own Tesla now. At least I can get the piece of the pie. And before we break down the performance and how the fund has been faring over the last couple of years, let's take a look at a dividend I just received a couple weeks ago. This was for holding the fund VFIAX, and just for being a shareholder, I received $95.05. The quarterly dividends, that was what I received for the fourth quarter, $95.05. And it's just a portion of a share, right? So it's not actually going to buy you a full share, but that was directly reinvested, and that bought me roughly like a third of a share because the current price of VFIX, the last price, is $341.47. And so that's why you're not going to be able to buy a full share with just the dividends, but over time it does add up, it does accumulate. And let's take a look now at the performance. So right off the bat, you'll see the total gains and the total gain dollar amount and the percentage here. 30%, 30.05 to be exact. Dollar amount is going to be $5,431.68. You do have to account for 2020, of course. In the beginning of 2020, it tanked like an absolute battleship. So the market did rebound rather quickly and rather swiftly. So it did recoup a lot of that money, of course, but it was a short-term loss. In fact, I think my portfolio was actually in the red. That's how bad it got, if I'm not mistaken. And I haven't made a contribution yet for 2021 yet. That's what I'm going to be doing very shortly. The ad revenue definitely helps. If you want to support the channel and contribute to my very own retirement account, hit that like button, turn it blue. Also, make sure that you hit that subscribe button, hit the notification bell as well. That will support me and my channel. Do appreciate that. And it will contribute some to my retirement account. So thank you so much for the support. Let's take a look at the breakdown now of my retirement account. So we'll have to scroll all the way down to the bottom to see the most recent contributions. You'll see right there, that was the December 22nd dividend that I received. That purchased 0.279 of a share. It's already up. It's actually in the green already. That specific portion itself. Then you'll see the one before that was on the 29th of September. That one was 0.289 of a share. So a little bit more before that. And then the one before that was on 6/29, and that was 0.35 of a share, 0.351 to be exact. That one's already up 23%, that specific purchase right there. Now, the last time I actually spent money out of my own pocket, the last time I didn't buy through a dividend but actually spent money out of my own pocket, was on May 22nd. So May 22nd was the last time I actually spent money. So it's been several months. That was one share, 1.023, so a share and a fraction. And that's already up. That specific purchase is already up almost 25%, that specific purchase, just from that date until now, present day. Then the one before that was May 20th. That one was 0.364. I just accumulate and buy any money I get. I just throw it right in. What I basically do, the strategy for my Roth IRA, is I look at it as a debt. So I look at it, whatever amount it is, whether you're contributing $6,000, $7,000, $8,000 for the year, depending on how old you are and what the limit is for that specific year. I look at it as a debt that I have to pay off as soon as possible. I don't like to have that debt on my shoulders. I want to get rid of it ASAP. So that's why the last time I did put any money in was in May of 2020. It's been such a long time because I try to get rid of that debt ASAP. I just want it away, and then I can focus on investing my money into my other portfolios now that I know that this one is out of the way. Not only do you have the whole year to contribute, but you also have until April usually of the following year to still contribute for the previous year. So let's say I did not fill up my Roth IRA yet, I could still contribute for last year, for the year of 2020, even though we're in 2021 now. But I could still contribute for 2021 at the same time. I could do both. But I'll be contributing for 2021 very shortly. As soon as I get my next ad revenue check, that will go directly right in, as December was a good month for my ad revenue, as well as, of course, any other income that is coming in. It will all go to this Roth IRA. I want to get rid of it as soon as possible, so that way I could push it off until next year, 2022. And just to highlight the age of this portfolio, we'll go all the way back to my first ever purchase under this portfolio, under this Roth IRA, was actually December 27th of 2018. So it's been over 2 years that I've been holding this portfolio. This year at the end will make it 3 years, of course. And if we look at how that specific purchase has been performing since then, that first ever purchase is now up nearly 50%. Nearly 50% that first purchase is, 48.65%. And you can see that specific value now is 4,608. That's when I purchased 13.495. Believe it or not, if you're an OG fan, you would know that that actually came from Fundrise. Fundrise is what I was investing in, the real estate investment trust under Fundrise, but I wanted to transfer the money. I wasn't a fan of the non-liquidity that Fundrise carried, so I wanted to put that in something liquid. And with the Roth IRA, you do get some liquidity. How so? Well, you could actually pull out what you put in fee-free, penalty-free. There is no penalty for pulling out what you originally invested. But if you do pull out earnings, that will come with a penalty. That will come with a 10% penalty. Now, under the next stimulus package, they might actually waive some of those fees. So depending on what the laws are right now for a 401k or Roth IRA or an IRA, you might actually be able to get that penalty waived depending on what the law is right now. This is only temporary because of the pandemic. As we know, a lot of people are resorting to their emergency accounts to fund their life as they're out of work. So that was the first purchase. Let's see the entire history now. We'll just kind of scroll through all the history. So it goes into January 2019, of course. Then you start getting into February 2019, March, April, May, June. Then you get into December of 2019. And then if you look at the history here, that is the first time I contributed for the month, or rather the year of 2020. So I started right away, right after the new year. Sorry, a little bit of a delay. Sorry about that. Just getting funds in order and transferring them around, getting a few accounts settled, and making sure that I'm not going to go over any limits. So that's what I did right there. That was the 2nd of January. That's when I first contributed for 2020. Then the pandemic came. The pandemic came right around here. CARES Act was signed around there, right? And then we're into April, but I still contributed, had to max out my limit for the year 2020, and I accomplished that on the 22nd of May. And then after that, I never contributed again for 2020, only with the dividends, only with the house's money per se. But one more time, the performance was $5,431.68, or 30% 30.05 up to present day from the second I opened up that account and funded it. That is where we are right now. Not bad for just a 5-figure portfolio. That's an average of about 15% a year, easy math, about 15% a year on average that this portfolio has performed, including the pandemic, of course. So had you not have had that, would it have been a much larger gain? Who knows? S&P 500 does tend to perform. That's actually above average. S&P 500 can perform anywhere from 7 to 10 to 12% for the year. Sometimes it can go up to extremely historic years where you'll have 30% gains in just 1 year. And then, of course, you'll have negative years in addition. So it's not every year that you're going to have a gain. But if you are contributing consistently and you are putting that money in weekly, monthly, quarterly, however you want to invest your money, however often you get paid, whatever floats your boat, whatever suits your lifestyle best, if you just make those consistent contributions and you dollar cost averaging is what allows you to average in your position into the market, you'll be able to eventually become out on top. That is how my Roth IRA has performed so far. I'm curious to hear about your investments. Do you hold a retirement account? Do you have just a regular brokerage account, or do you have an IRA of some form? Or do you just contribute to your employer's 401k? How do you invest? What do your retirement accounts look like? Let me know down below in the comments. Feel free to share. More updates are to come in the future. If you did enjoy this video, give it a big thumbs up, smash that like button. And if you want to see more videos from my channel, also be sure you are subscribed. Hit that big red button, the subscribe button. Also hit the notification bell as well. Looking forward to seeing you guys in the next video.